Hello, folks. Charlie Gipple here with CG Financial Group. It's been an odd week. It's been an odd week that reminded me of a conversation that I had a few months ago with this guy that called me. And the conversation was around product development. And when I say that this has been an odd week, it's been an odd week in a way that just coincidentally, this one product area has been every single illustration that we have run from the agents that have called in. And again, that's purely coincidence. I'm not saying the world changed in the last week, but it did remind me of this conversation that I had a few months ago. So this guy calls me up, introduces himself to me, and asks me if I would like to take part in product development, a product development and distribution strategy survey. I said, well, yeah, that's interesting. I love that stuff. I love that stuff. And I hope you have some time because we could dig into that. But I asked him if he could dig in a little more to what he does and who is going to see these results that we talk about. We'll come to find out he was a consultant. And he was a consultant for an insurance company that was hiring him to do distribution strategy consulting as well as product development consulting. And he had gotten my name from some colleague in the industry here. So I was born at night, but I wasn't born last night. And I thought, I thought this. I didn't say this. It would have been rude, but I thought, so you want me to give you my information so you can go back to the carrier, pretend it's yours. But I'm fine with that, right? You call it a attitude of abundance. You share information because you know what? What goes around comes around. So I did. I shared about an hour of my time with him, and I really talked about three different things. The first thing is really in the vein of what it was that I experienced this week. Again, this week was just purely coincidental, but it reminded me of this. And it was this. I told him, I said, there have been very few times in my career, and I feel this every day. I see this every day with illustrations of stories that I hear from agents, but I myself have experienced very few times in my career to where a client comes to you and says, this XYZ type of insurance product, I want that. Can you give me a quote on XYZ type insurance product? Very few times people don't wake up in the morning and say, you know what, I want to go out and buy life insurance. When and what is it that I'm referring to? It is the instances where that client has either experienced themselves or witnessed somebody who had experienced something called a long-term care event. It's tattooed in their minds, it's tattooed in their memories, it's tattooed in their hearts. The experience that they saw that person go through and their family go through as a result of that long-term care event. Very few times in my life have I experienced anybody wanting to buy insurance from me. Those were the few times. And yes, maybe a couple of small term policies or what have you, but I don't think they wanted to buy those policies. With this, in these situations I'm talking about, this morbidity risk, these long-term care policies, asset-based long-term care policies, it was a desire for them to purchase this. And that was a big part of my conversation that I had with this individual. And he asked the question that I've gotten this question before from some actuaries. Charlie, that's great, but how are we going to figure it out? How are we going to figure out this long-term care thing when many companies have come before us and have failed at figuring out this long-term care deal? First of all, you cannot take asset-based long-term care pricing and plug that into what has been experienced in the past with traditional standalone long-term care. First of all, I believe that the carriers that are offering traditional standalone long-term care insurance today, that if you don't use it, you lose it proposition, I believe that those that are offering those today, they have it right. They're not assuming 6% lapse assumptions that many people will pay for their policy and then lapse it, and then the insurance company isn't on the hook. Those assumptions are gone. They're not assuming 6% or 7% long-term interest rates. So I'll first say that I believe that traditional long-term care insurance today, as it's priced today, it's good. It's fine. I like it. But, isolate that conversation. Asset-based long-term care. Pricing dynamics are completely different, right? Why is that? Because when you think of cash value in a life insurance policy or an annuity policy, which I believe this is the future. I believe this is the future. Asset-based long-term care, whether it's an annuity policy, a life insurance policy, you have that cash value in there. When that cash value, which is the client's money, when that comes out first, before any of the insurance company's money comes out, you have a completely different pricing dynamic, right? It's like a high deductible long-term care plan is what it is. So first of all, because of that reason, it is priceable. And second of all, you have the behavioral component to it. And that is, if you are in the if I don't use it, I lose it proposition in that type of a product, well, yeah, I stub my toe and oh man, I can't do 2 activities of daily living. Insurance company, give me my money, right? Well, when your money is coming out first, when it's your money that you're spending by taking it from that asset-based long-term care policy, I will tell you, and actuaries will tell you, actuaries that know, will tell you that the behavioral components, the claim experience is much different on asset-based long-term care. So my first point is you have 80 million baby boomers. Breaking news, I know 80 million baby boomers that are crossing the 65 line. And by the way, the youngest baby boomer isn't going to be 65 for another, 10 years, 2029. 2029, not going to be 65 for another 10 years. So the tail on this opportunity, it's absolutely huge, right? So that's the first thing. Think asset-based long-term care, as well as a bunch of other things. But this is what I believe is one of the largest growth components or growth opportunities from a product development standpoint. Maybe it's not technically long-term care. Maybe it's taking the chronic illness thing to the next level. The second thing is this. As I've said a million times, who is the number one retailer in the United States of America? It soon will be Amazon, but right now it's Walmart. Why is it Walmart? Only because Walmart has actually embraced the online shopping experience, right? My point is process. The process in which people purchase these products, I believe, is just as important, if maybe not more important than the product itself. This consultant asked me for an example. And I said, well, take for instance, bank distribution, right? Which is a very important distribution. Registered reps are an important distribution. Where's all the money at today? I'll tell you, the $60 billion a year indexed annuity business is nothing. Unfortunately, it's nothing compared to the security business. It's nothing compared to the $14 trillion of M2 of money supply that banks have sitting on the sidelines effectively. But I digress. Take bank distribution. I said this. So how does a consumer purchase a product, any type of insurance product, when they purchase it from a bank? What does that look like? Are they sitting in somebody's office? Well, no, I mean, I go into Wells Fargo, it's wide open, it's a bullpen. Yeah. So imagine that client who's talking about their prostate exams and all that other stuff in this massive lobby at a cubicle at a bank talking about their health information, or that 20-minute phone interview many carriers have. They're having to do that all verbally. That's an example of maybe some stuff should be on paper and fax versus, the phone conversation, right? And by the way, this is not just theoretical. There are, well, I say one, but there are actually a few companies out there that have information that would otherwise be a verbal phone conversation, and they put it on paper, and that makes a difference in the bank environment. My point is not about bank distribution. My point is process, and a little bit makes an absolutely huge difference when it comes to these types of products. The third thing is this that I mentioned to him. I have 2 kids, 2 young kids. Needless to say, I've been through McDonald's drive-through, a time or two. Well, I could go a lot of different areas off onto that. Accuracy is important, by the way. But my point is so when I order for my 9-year-old son, say a Big Mac, do I actually order the Big Mac? I don't order the Big Mac, right? What do I order? I order the number 1. The point is much of the way that we purchase things today, the Costco experience, the Sam's Club experience, the whole turnkey package type experience. Think of that when you think of product development. I could give you a million different examples. And I guess kind of the asset-based thing, the Swiss Army knife of products would be a good example, but I'm thinking even further. Maybe it's some of the warm and fuzzy type experience that's packaged up with the product metrics. Like for instance, Are some insurance companies that have like a concierge service for the clients for their IUL policies in years 2, 3, 4, 5, 10, 20, all that stuff. Think of that turnkey package type experience when it comes to product development. But anyway, this conversation was a heck of a lot shorter than my consultant conversation. But for those of you developing product, or maybe not developing product, but distributing product, I hope that this video at least gave you a couple ideas, not really to give you anything finite that is the million dollar key, but rather just to get your wheels turning and think about what it is in your practice, whether it's turnkey type stuff or whether it's talking more about long-term care. I hope that at least helped somewhere in there. Charlie Gipple with CG Financial Group. We're a marketing organization working with agents in asset-based long-term care, annuities, and life insurance. Have a good day.